Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 28th of February, 2024. So as we look at the market, one stellar performer today, and was Bitcoin. Yeah, it sold off a little bit from its highs, but it was over 64,000 today. The market has come alive in a major way ever since they approved the ETFs. Yes, you had that run up and a break, but you've come back. And now the market's waiting on the Ether ETFs. But we have another event coming up in that. Remember, the halving event, where whatever's being made now gets cut in half again. So as you keep making less, and as the believers in this see it, they keep buying it. They've been flowing into the ETFs, and they're still doing it in the future. So congratulations to those people that have been able to do that. In the stock indices, I have been telling you here that I thought we would enter a consolidation phase, and my gosh, we have. I'll show you that in a minute. I think I've been on the money on that. But at the same time, you get a broadening out. So this broadening out, you're seeing other parts of the market come alive, the industrials, the healthcare, things of that nature. And we're coming to the end of the earnings season. So we had some earnings come out at the end of the day, and you might be wondering, why did the market drop like that? Well, Salesforce and some of the other stocks did get hit. But when you look at the market, how much is it off its high on a closing basis? 0.5%? I mean, wow. When I said I thought we'd consolidate, I don't think I was wrong. What would you call that? I'd call it at this point consolidation. The pattern is still one of higher lows, higher highs. The support's back at the 50, 34.5 zone, the 18-day average of closes. The market has been paying attention to the upper Bollinger Bands and running into the resistance there, backing off, but has not given up that pattern of higher lows, higher highs. And for some of us that are technicians that watch these markets over the year, it's unusual to run from October, which we've done without a 3 to 5% correction in the market this long. So it is an event that is in the back of many of our heads. And no, I am not a top picker. When it comes, it comes. But I'm aware that it is overdue. And something negative that could set this off is the fact that you're getting a broadening in the stock indices where you're seeing other markets, in other words, the Mag 6, as I now call them. Kramer, I think, called it the right way. They're not the Mag 7 anymore. People taking monies, putting it elsewhere. Well, if you get that correction, it feeds off itself because people are buying at these lofty PE levels, and we'll see if the market can hold up. But calling a top, I'm not capable of doing that. I can see where the support is. We'll see what happens there. Momentum is not embedded. So you have an overbought market that's still in an uptrend. Overbought doesn't tell me to deploy or tell my clients to deploy new money. Same thing going on in the NASDAQ. And notice how the market is basically just bouncing back and forth and tightening up these Bollinger Bands. There'll be a move out of it. Which way is the question? That's why I want to present. You haven't had a reasonable break in a very long period of time. It is overdue. Does it have to happen? Nothing in the world has to happen but taxes, I guess, and death, but it is overdue. What will trigger it? It could be anything. Does it have to be triggered? As I just said, it may not happen. I can't imagine it doesn't somewhere along the line. In the Russell, overbought as well. Then we come to the notes and the bonds. Well, I've pointed out, I think correctly, here we are at the going into the fourth day of the week, that the market keeps fighting right here at this 100-day average. The trend was down, but tonight you're getting an indication of a problem if it holds up. Let's go to the close. On the close today, you still had numbers. Well, this wasn't under 20 anymore, but it's not over 21. When you reopen because you close near the highs of the day, the odds are you're going to lose the embedded reading on the open, and you do. But we're not at the close. You could regain it, but 25 is a big number. it's got to fall quite a bit to re-embed. It can certainly happen off the PCE, but it's a warning sign that this market's acting a little bit like it wants to rally at this point. Would I try to play off that? I would not. You have the same thing happening in the 5-year note. So there's plenty of warning signs that you might want to make these rallies here. Be careful. That's the best word I can give you. In the dollar index, you have been stuck between the red line, the 18-day average of closes, and the green, literally for a week, going just churning. That tells me, and I tell my clients, why do you want to play that? You now have a pattern of really, these red lines are not the right. They're really higher lows, higher highs, but you did close under the 18-day average, so you keep the bias down, but the swing line is flipping around on you, and you're flip-flopping that in the euro. I just didn't do these in time. I'm sorry about that. But they're actually lower highs, lower lows, but the bias is up since you're over the 18-day average of closes. I thought I had done all these. The British pound, lower highs, lower lows, right to the support here of that as well. And in Bitcoin, well, you're over the upper Bollinger Band. You only stay over that 5% of the time. The embedded reading is the culprit here. This has kept you bullish this whole time. Until that red line closes under 79, you're in the bull camp. Would I ever tell you to buy over a Bollinger Band? It's not going to come out of me. It can come out of other people, and they might be right. But you only stay outside of that band 5% of the time. You can generally do better. That's the point. When we look at the differential between Brent and WTI, they just keep narrowing the difference in. You could see that the market is overbought. You got a higher high, lower low, not doing an awful lot here one way or the other. And the same in the WTI. These charts are a mess right now. I want to repeat, these charts are a mess, a lot of them right now. Not the place and time, in my opinion, to deploying new money in the market, all right? You wait for the setups and then you jump on them, all right? You've got to be right there. We're not talking day trading. We're talking position trading, basically. But these aren't where it's at. You got to wait for the setups to come. In gasoline, I'm a longer-term bull. I mean, come summer, spring, I think people are going to drive. I think gasoline demand goes up at that point. But right here, the market's fighting a battle at the 18-day average. It's not saying bull or bear. It's just hanging around there. And in that gas, when you lost the embedded reading, I told you I thought we'd get eventually to the 18-day average of closes. And by gosh, it took a while, but it did it today. You tried to challenge it yesterday, you did it today. I don't know why none of my arrows are in the right spot. I know I did them, but I must have saved it wrong. But regardless, the idea here is this has put in a near-term low. I don't think it has the power to rally up and hit the Bollinger Band, but it's certainly knocking the shorts out. And this has been a long-term bear market. So I wouldn't be one to say, oh, let's sell the first rally in that. I'd let the market get out of it. Don't stand in front of it. Maybe that's the right word. Let the shorts that want to come out and say, okay, I've seen enough of that, and that's where we're at. And do I think eventually it'll reestablish a downtrend? Well, it certainly looks like that's going to be the case. But, you know, we're at that time frame where when you come from a market from 320 and it gets down into the 160 level, it can afford to bounce. So got to be careful of where you're at, what you're trying to do, and at what point in time you're trying to do it. And that brings me to what I give you in the mornings. Because in the mornings, at 5 in the morning roughly, I start recording my futures update. And I do it then because I want to cover all what's happened overnight in Europe or Japan or China, wherever it might be, and what reports are coming out in the morning. Try to be ahead of them, giving you an idea of what they're doing. And then we're looking at the chart patterns. Let's do this. Let's do that. I make very specific recommendations. They're not, well, maybe you want to do that. It's buy here, sell there. Here's the reason why. Here's the chart pattern. Here's what I see on the daily chart. And I often will open up for you a weekly chart and say, okay, the two are agreeing, they're not agreeing. What's going on there? I mean, it's looking at pattern recognition. I cover all these categories. So yes, I cover the grains and the softs and the meats, and I cover all these categories plus individual stocks on the ETFs as well. How do you see this? How do you look at it? It's pretty simple. All you need to do is go to iraepstein.com under the word research, or you move your cursor up here and away you go. I'll be with you first thing in the morning, about 8 o'clock for the general people. You'll see me, of course, with my subscribers in the morning. Let's get this PCE and this other data out of the way and go back to trading. I'm Ira. You have a good day.